For more on China's economy, we're joined by Henry To, Chief Investment Officer, CB Capital Partners. Good to see you, sir. Let me start with these numbers. I am so confused. One minute we like the numbers, next minute we don't like the numbers. The numbers were not good, but somehow people like them. What's going on?
I thought they were good, Phil. When you break down the numbers, exports were better than I expected. The trade surplus we got was the second largest in history. When you look at what has not done well, it's really import. Focus on that, dig deeper, it's really commodity imports. And we know that China has been shifting away from investments and into consumption anyway. So I'm not that surprised, and I'm not too alarmed by the latest numbers.
This issue on, a lot of people are saying, I don't want to get into the politics of it. The bottom line is it good for exporters or is it not good for exporters? And I guess you have to think about the importers too.
I'm actually indifferent to it. As of right now, I don't see the yuan appreciating or depreciating very quickly, primarily because, I think there's a lot of, over the weekend, there was a G20 meeting, and the Chinese policymakers were getting a lot of heat from other policymakers about the depreciating yuan. And right now, Chinese policymakers have a lot of firepower. We still have about $3.56 trillion of foreign reserves to defend the currency. And with the latest trade surplus numbers, frankly, I'm not too concerned about that. And I think going forward, at least over the next several months, I think the yuan will be stable.
So, okay, let me get back to the economy for just a moment. Last week, we had those PMI numbers that showed that the economy was likely to contract, at least in the future, in terms of manufacturing activity. So that was not good, right? Then we have the issue of all this loan and debt that I'm hearing from a lot of companies. They're trying to get to the banks. They're trying to borrow more money. They already have a lot of debt. I mean, these two things, is it a serious issue for the economy, or can we get around all that?
I think the Chinese manufacturing issue is a long-time issue, because when Chinese policymakers realize that, that's why they instituted the Made in China 2025 strategy, where the purpose is to move up the value chain, but also to build global brands in order to get brand recognition across the world for more Chinese exports going forward. With respect to the debt levels, I am concerned over the long run, but when you look at what the debt is being owed, it's really owed to Chinese domestic savers. There's really no concern on my part in terms of more foreign outflows flowing from that. And most of the debt is actually situated in state-owned enterprises and real estate. And as long as real estate prices hold up, they don't need to go up a lot. As long as they hold up, I'm not too concerned about those right now.
Part of what we faced in 2015 is a little bit of an emerging market scare. So follow me. We got issues with Indonesia. We've got reforms in India that aren't turning out as good as people would like. Brazil, the economy there shrinking despite all the investment, but people are saying, well, it's a lack of reforms. Then you have the whole China issue. All these are developing countries, and they're not shining as much as investors would like. What's going on, and where are you putting your money?
I am on the same boat as the lack of reforms in countries like Brazil, Indonesia. I think it's going to be a multi-year process, because those two countries in particular have benefited from the commodity resource boom over the last 10 years. They really needed that money to fund education, to invest. And for the most part, they have not done that outside of the Olympics and the World Cup. Now in Brazil, going forward, I think you really have to differentiate emerging markets. You have to look at the countries that have implemented reforms, for example, China and now India. So right now, we've been slowly, gradually moving our clients' money into Asian stocks, primarily in China and Hong Kong, mostly HSBC. We still like the casino companies in Macau, and anything that has leverage to higher Chinese consumer spending going forward, because frankly, we believe that's a multi-year story.
It's funny you put the casinos and the banks sort of separately. I think some people put them kind of together. When you look at the end of this year, some people are saying that, look, we had a little pullback of 10, 15%. We're going to push higher, and the bulls are going to end up winning for the year. And I don't want to do the gambling bit, but in 2016, where do you see the market being?
Yeah, so I think it will stabilize at current levels. I'm not making a bet either way, Phil. When you look at how many people have gotten hurt in the Chinese market, and I'm assuming you're talking about the Chinese market, yeah, many of those people will not come back for the foreseeable future. I like it in the long run because, frankly, I think there's a lot of American investors who would like to invest in China, but also, again, they've been worried about what happened this year, so it's going to take a longer time, maybe 2017, 2018.
There was a report out today from the World Bank asking the U.S. Federal Reserve to basically not raise rates in the September meeting. I'm curious, from your perspective on an international front, do you care if the Fed raises rates or doesn't raise it, rates in which is only really a quarter of a point if they do?
Yeah, I'm more concerned about how quickly the Fed will raise rates going forward. I believe the Fed will not raise in September. I believe they will raise in December. But it really depends on how quickly they raise. Right now, people are only factoring in maybe a 25 basis points, 0.25% raise in the next 9 months. If the Fed raises more quickly, then that would not be a good development, because when you look at history, whenever the Fed has raised rates more quickly than expected, bad things happen. In 1994, for example, a lot of investment banks lost money. Yeah. Orange County here went bankrupt. So I think the Fed will raise one time this year and then will stop for 6 months.
All right, Henry, we'll see you in Los Angeles. Good to talk to you. Thank you very much for helping us on this.
Thank you, Phil.